the AI revolution, you can't stop it. It's coming. It's being led by big tech. And I think more and more the innovation, the monetization on the consumer as well as on the enterprise side is actually being underestimated by the street. Look, coming in, once Trump won, you were definitely going to go through a period of digestion period in terms of US, China, TikTok, tariffs, any sort of worries are going to get overblown. I think we saw that with DeepSeek is a good example. But it comes down to, look at this earnings season. I mean, $325 billion. That's it. That's CapEx that's laid out by Mag7. $100 billion increase year over year. So I think it just shows this is the beginning of the AI revolution.
Hello everyone, I'm Jun from SamproTV. Today we are joined by a familiar face for our viewers, especially those who invested in US stocks. Dan Ives, Global Head of Tech Research at Wedbush Securities, known for his deep insight into tech stocks. Dan is here in Korea to share his ideas on the current state of the AI-driven market. Welcome, Dan.
Yeah, great to be here. Good to be back.
I heard you arrived yesterday.
Yeah, so I got here yesterday. And I'll be here for, call it 3 days, meeting with top companies, investors, institutions, retail, really around the country. And look, the goal is, and Korea is obviously one of the epicenters, in this AI revolution, it's me discussing with investors where things are going, but also it's hearing from some of the top companies and even some of the private companies, what they're seeing specifically in the supply chain.
Okay, just before we broadcast, like you said, you fly around so much, like 50 hours of the flight, like for the last weeks. It must be tiring.
Yeah, so look, I mean, part of it is 3.5 million air miles in the last, 25 years. I think that's been one of our advantages. I think it gives you a global perspective. And I think especially when it comes to whether it was cloud computing, whether cybersecurity, of course now in terms of AI revolution, I think that's always given us an edge. But on this trip alone, I think we're in the air like 55 hours or something like that in these 2.5 weeks. But, I think for any investor that's followed us over the years, I think it gives you an edge, but I think also it gives you just a great perspective, even from an investor, in terms of where sentiment is. I could even gauge in the years coming here, sentiment, how it's just gone dramatically different, even in the last, call it 3-4 years.
Why is Korean market so important to you and your company?
Yeah, I think especially in terms of its retail presence. I think it's an outsized retail presence, specifically when it comes to tech. We have a partnership with Hana Securities.
Hana Security.
And that's very important for us in terms on the retail side, but then on the institutional side. I think the institutional presence has just continued to grow in terms of the U.S. focus on a lot of these stocks. And, for someone like myself, decades covering tech, Korea, I think, has become more and more of an important market, even over the last 4 or 5 years.
By the way, how's my outfit? How'd you evaluate?
I mean, look, outfit, I'd say 1 to 10. That's like a 9.5 to 9.8. I mean, I am super impressed. It's and again, fan of Winnie the Pooh to begin with, but also it's look, it's also nice to see a fellow colorfully dressed individual here.
I was always inspired by not only your ideas but also your fashion. So I looked up my closet and tried to find the fanciest clothes I can ever get.
Seriously, thanks so much. It's look, and part of it is when I and as I've talked about, when I dress like this, a lot of it is I dress differently, very similar to how in terms of stock picking, right? It's a different view, never afraid. Remember, haters hate. But it's just trying to just be comfortable in your own skin. And I think in this environment, it's what makes it exciting.
I think it's same to the stock. It must be attractive. It must be lovely. It must have draw people's attention.
Well, part of it too is that it's, I think the fashion is something that investors understand. I go to a beat of a different drum. And even when you talk about what's happening in tech, it's very easy to get caught up in the typical sort of sort of sheep mentality. And I think in Wall Street, that's actually been one of the issues, right? Where the typical suit,
right,
focus on valuation. If you can't see it in the spreadsheet, you can't own it. And that's how I think so many tech investors wearing the Peter Millar vest, they've missed every transformational tech stock the last 20 years because they're just focused on valuation they can't see in their spreadsheet.
All right. So talking about the tech stocks, let's dive into the conversation about NASDAQ.
Yep.
Firstly, for the past 3 months, NASDAQ has been trading sideways between 19,000 to 20,000 points over the past 3 months. Some argue that we've hit a near-term ceiling, and others see room for another breakout. What do you think?
I view it as a digestion period to tech stocks going 20 to 25% higher this year. Because my view is always, look, coming in, once Trump won, you were definitely going to go through a period of digestion period.
Right.
In terms of U.S., China, TikTok, tariffs, any sort of worries are going to get overblown. I think we saw that with DeepSeek is a good example. But it comes down to, look at this earnings season. I mean, $325 billion. That's it. That's CapEx that's laid out by Mag7. $100 billion increase year over year. So I think it just shows this is the beginning of the AI revolution. So I believe it's one where we got, obviously, NVIDIA report, a week and a half from now. But that's something where that's the biggest piece in the puzzle after a massive tech earnings season. But I believe this is a pause, a digestion to a market that actually rips higher this year.
How about the near term? Do you see there must be a new catalyst or narratives that push the market a little bit higher?
Well, I think it's actually set up well. I mean, if you think about big tech earnings, even despite maybe some of the reactions a little more muted, like a Microsoft or Alphabet or some of the others, the numbers speak volumes. And I believe now it's about the second, third derivatives playing out. The monetization across software, when it comes to names like Massive AI, Palantir, Salesforce, ServiceNow, and others. But I believe the catalyst is ultimately NVIDIA. I think when NVIDIA reports in February 26th, that's important because that's going to lay out, we believe demand to supply right now is 15 to 1 for their chips. That's going to be sort of the drop the mic that investors ultimately could look at that and recognize that, look, this is actually now the beginning of this next phase of the AI revolution playing out. But go back to DeepSeek. NVIDIA is down 17% in a day, okay? Because of something that ultimately the bark was a lot worse than the bite. I think it shows to just the nervousness and also even some of the nervousness in terms of U.S.-China trade war, tariffs, and what that ultimately means. And I just continue to think bark's going to be worse than the bite. It's all part of a negotiation. This is a game of high-stakes poker. So when you're playing poker, it's all part of the and that's what Trump administration's playing.
You talked about nervousness. So some argue that NVIDIA's nervousness comes from NVIDIA's valuation. They see NVIDIA's valuation stretch as investors price in next year's earning. And even looking at other software companies, they're under mounting pressure to deliver the numbers. So from your perspective, what's the new storyline or narrative or from NVIDIA's perspective?
I mean, I look at it when I look at Blackwell chips and I look at demand, and despite all of the worries and skepticism, you still are just having an AI revolution built from big tech spending. You haven't even had the sovereigns and other enterprises around the world start to go into this. So ultimately, I could argue NVIDIA is one. When you look out, you're going to have $6, $7 earnings over the next 12, 18, 24 months. I could argue 30 times. I think there's a $200, $225 stock. So my view is when you look at just the valuation, to say it's stretched, I disagree because I view it as the street's underestimating demand by 15, 20%, when it comes to NVIDIA, and you haven't even factored in physical AI when it comes to autonomous as well as robotics.
Okay. As you mentioned, DeepSeek, like China showed that, from the AI perspective, they can work on the hardware and the software. And then because they're short of the really cutting edge chips, they worked on the software. So can that inspire US tech companies to work on the software building engineering, rather than just investing so much money on the chips that maybe damage NVIDIA's
Well, first of all,
valuation?
DeepSeek's a great model, so just take it for what it is.
Yeah.
And models are going to get cheaper and cheaper, and it's all part of the commoditization. But to say that a $6 million LLM is going to take down U.S. tech infrastructure was just way overblown. I think actually speaks to nervousness, in terms of that narrative. And obviously that narrative continues to play out, right? Did they spend $6 million? Did they ultimately spend hundreds of millions? Was it NVIDIA hardware? Was it non-NVIDIA? The reality is that when you build enterprise build-outs, in terms of, you're spending 15, 20, 25 million, you need NVIDIA chips to start. I don't view DeepSeek as bearish. I actually view it as bullish.
Okay.
The cheaper the models get, the more GPU capacity for the actual enterprise scale projects. So that's actually why tech's embraced it. And again, I view it as there's going to be bullish AI when it comes to China. I mean, that's why my view, whether it's K-Web, whether it's Baba, Baidu, we'll see what happens in terms of the Apple deal and others. I don't view it as mutually exclusive.
Okay.
I never have viewed it as China bad, US good. I view it as we are in the beginning of $2 trillion of AI capex over the next 3 years. But the reality is there's only one red phone to get the chips.
Okay.
It's the godfather of AI, Jensen, NVIDIA.
Okay. Let's talk about China from the geopolitical perspective. You've been quite vocal recently about US-China tensions, even telling barons that Apple finds itself as a poker chip in this high-stakes game between Trump and Xi. Now, with players like DeepSeek, BYD, or Huawei gaining momentum, how real is a threat that posed to U.S. tech giants?
So I view this all as a game of high stakes. TikTok's a poker chip, and then on the other side, Apple's a poker chip.
Right.
It's all part of a broader negotiation. Now, look, the reality is probably in the next week or two, Apple officially announces Baba's their partner. They launch AI in China. And China's a core market to Apple. It's 20% of demand. But on the other hand, when it comes to overall negotiations, comes to the worries, I think this is not going to dent the AI revolution. I don't think retaliatory is going to be as much of an issue when it comes to names like Apple and Tesla. And I think the first poker chip is TikTok. TikTok, ultimately, how that's handled with the 75-day window, is that one where the algorithm still stays with ByteDance? Is it a 50% ownership? That could start what maybe is a little, friendlier U.S.-China negotiations. And I would tell you, the market doesn't lie. The stocks are telling you, I'm not too concerned about U.S.-China despite all the antics, because it's trying to read through with Trump. Okay, A leads to C or D.
Okay.
When you get off Florence, Italy train station, and someone says a leather jacket's $400, do you pay $400? No. You say I'll offer $100. You eventually buy it for $200. The point is, it's all part of a negotiation that's playing out.
So, consequently, all the AI market is amazingly growing. But
that's the reality. In other words, I'm not saying we're not going to have DeepSeek, some of these nervous periods, tariff. Just think about it. Trump comes in 60% tariffs.
Yeah.
In reality, it's been 10%, and actually, I'd say it's pretty staged in terms of whether. That's why Jensen's going to be very involved. Musk is going to be very involved. Cook's going to be very involved. Because there's an understanding look, U.S. needs China. China needs U.S. But that's going to be this careful balancing act as it all plays out. over the next 3, 6, 9 months.
Okay. From the technological point of view, like for some viewers who's curious about Chinese tech, do you think that China is closing the technological gap between US tech giants faster than you expected?
Look, I think if you're put in a box, you're going to try to innovate. And essentially, like, China's had to innovate, right? With restrictions and without access, to high-end chips. But also, counting out China tech is the wrong move. I mean, I personally believe like China tech is way oversold. Like when you look at names like Baba, JD, Tencent, like I think China tech is way oversold because they are going to be big players in AI revolution.
Right.
I do think the gap has narrowed, just like it always is gonna. Like the gap's never gonna be as big as you think it is. Now I do think how this all plays out in terms of chip restrictions, ByteDance, IP, overall trade negotiations is very important. But I continue to think that you're gonna have winners on both sides. I think U.S. tech is gonna have a tremendous year. And actually, I think China tech, which already is off to a good start, I think is going to have a very strong year as well. Okay, so most importantly, like should investors be more careful or like considerable about like this escalating tech rivalry or not? I think you keep an eye on it, but you don't let it overshadow your because look, I can just tell you, covering tech since the late 90s, so many times, if you actually focus on geopolitical and macro, and you let that ultimately dictate your investment narrative, you want to own big tech because you were worried about Europe, Greek debt crisis. You would have worried about interest rates, worried about geopolitical. I think you have to always keep an eye on it, but you have to keep eye on the prize, which is it's still 10 p.m. in the AI party that goes to 4 a.m. It was 9 p.m. But the point is, like, we have a lot of room ahead in this tech bull market, especially as the monetization plays out and you look at names like Palantir and others, which is just the start of the software piece playing out.
Okay. Then let's talk about some specific tech stocks. The Mag7. Apple, Nvidia, Microsoft, Tesla, and their peers remain the center of the market conversation. So do you believe that these tech giants will continue to lead the market, or are we likely to see a little shift or diversification in the market?
I think big tech continues to lead market high. Look, I think Apple will hit $4 trillion market cap. I think so will Nvidia, in terms of this year. I think the narrative is now the second, third derivative start to take hold.
Okay.
Software, front and center. I think it's actually going to be a year for software AI use cases. Palantir started, ServiceNow, Salesforce, MongoDB, Elastic. Like, I'm giving an example, Adobe as well. Like, I think that's where a lot of that's going to play out in terms of the software AI. And then even on the consumer side, if you look at Meta, Google, I actually think they're in massive positions of strength along with Amazon because look, it's about the chips, the hyperscalers, but then ultimately I think it's going to be the software angle that's going to play out as well.
From the software perspective, do you want to mention one specific company?
Look, I mean, Palantir has been our table pounder, right? I mean, and the haters, they hate it at $12 when it's a teenager, despise it at $40. Screaming from the roofs at 70, 100 yelling into a forest. Look, as I always say, the haters, the bears in hibernation mode, they can't see AI in the spreadsheets. Palantir, I believe, is the next Oracle, the next Salesforce.com. That, to me, is actually just the start of the software piece playing out across AI.
Okay. How about Tesla? You're always bullish stance on Tesla, despite competitiveness and the pressure from the BYD and disappointing quarterly result and shifting rate cut expectation. Like you've maintained a buy rating with the target price of 550.
Yep.
Yeah. So Elon Musk influence on the Washington could be a game changer, as you said. So what's your view on Tesla then?
Look, I think last time I was here, Tesla is 160, 170, and $200 higher, right? I mean, since whatever October, because I think it speaks to like, forget politics. The reality is that the best thing Musk ever did, the bet for the ages, was betting on Trump, because Trump is really gonna the deregulatory environment, having a front row seat at the White House. Autonomous is the future for Tesla. And I think now that robotaxi, that autonomous feature is going to be massively accelerated with Musk essentially, being in the White House. And I think, look, Doge and all of the other worries about balancing time, the political angle, brand destruction. Tesla right now, 90% of the story is autonomous and robotics. That continues to be the future.
How's the big picture coming? That like Elon Musk is on Trump's side. He bet on Donald Trump, and then Trump is anti-environmental. So like Elon Musk is manufacturing electric vehicle, and then Trump is shouting "drill, baby, drill." So how do those two things stand together?
It's a great point. I actually believe being negative on EVs, and even though it sounds like a Twilight Zone jigsaw puzzle, taking away the $7,500 tax credit in the U.S. is actually negative for EVs in terms of GM, Ford, Hyundai, others are obviously trying to focus on the market. Bullish for Tesla, because Tesla has the scale and scope that's unmatched. You take away that tax credit, it just gives them that much more of an advantage, because when they sell $35,000 cars, they have $10,000 profit.
Right.
Others, if they sold $35,000 cars, they have a $15,000 loss. So now that gap never gets there. Now you could also say Tesla got there in U.S. government. Now they pulled the rug under from everyone else. They're at the top of the I get that argument, right? But ultimately, it's really going to be competitive and building the best EVs. Look, GM now, I mean, I think they're starting to have more and more success. But the reality is that the Beltway and the regulatory was the biggest thing in front of Tesla. Because it all comes down to, we believe autonomous is worth $1 trillion alone for the Tesla story. I think it's a $2 trillion valuation. So if they have weak numbers out of China in a given week, brand destruction worries in Europe, I kind of view it as noise in the broader view of where I see Tesla going. Okay.
So can we expect in 5 or 10 years that all the electric vehicle can be a Tesla, or like manufacturers are the company, but actually they have this Tesla's software?
Well, I think it's really about autonomous, because eventually other companies are going to have to OEM autonomous technology from Tesla.
Okay.
And I actually view it as like the software piece. The key thing is really because that's going to be, when you look at like full self-driving, the software margins, what that's going to ultimately do. I mean, that's going to be the key to the whole Tesla story. And look, FSD unsupervised is coming to Austin, Texas in June. That's 9 months ahead of plan. We are in a fourth industrial revolution. I continue to think Tesla is the most undervalued AI name in the market.
Okay. How about Apple? Like, is Apple your top AI pick still?
That's another one. The Seoul cab driver, the New York City cab driver is bearish on Apple, but yet they've missed the last $2 trillion of market cap. Because I think what the bears underestimate in Apple, it's the install base.
Yeah.
You have 1.5 billion iPhones, 2.4 billion iOS devices, and the consumer AI revolution, 25% of the world is going to access AI through an Apple device. The upgrade cycle, this is an elongated upgrade cycle for iPhone 16 into iPhone 17. But you look at the last quarter, much better than feared. the streets, the demise for Apple, that they're already, saying that this was going to be the demise of Apple, but it never happened because you focus on the install base. And I believe the services business is worth $2 trillion alone. The first $4 trillion company will be Apple, I believe, this year.
Yeah.
And I think they continue to prove themselves. And look, especially like as Baba and Apple officially announced that deal, that's going to be significant. Because also when it comes to Tim Cook, 10% politician, 90% CEO.
Okay. So applying like AI services to all the Apple devices.
It's going to be 10 to 12 to 15 billion incremental per year. You start to run rate that. I mean, you're going to start looking at a services business that ultimately will approach 175, 200 billion. And that speaks to our view in terms of where this is all heading. The consumer AI piece will go through Apple. So now it's not about, some of the skeptics will be like, oh, Apple Intelligence, 18.3, ChatGPT, I'm not using it that much. The reality is it's about Apple Intelligence being the platform that hundreds of applications are going to get built on top of Apple Intelligence. That's the golden goose for Apple.
Okay. But by the way, like Apple's not servicing Korea. Like what's happening?
But that but even if you look at Apple services in China, which has been on the, I mean, what's unbelievable is like their services is really primarily like a U.S., Europe, and obviously a little rest of the world story. And look, and I think it just speaks to more and more where this is heading. The AI revolution, you can't stop it. It's coming. It's being led by big tech. And I think more and more the innovation, the monetization on the consumer as well as on the enterprise side is actually being underestimated by the street.
Okay. How about like on the other side, is there any stocks or sectors that you are cautious or bearish about like recent surge?
I think like IT services. You'd be a little more negative just because in IT services, you're going to have more and more of software ultimately owning AI. So like if you think about like some of the IT outsourcing and the Cognizants and some of the others, that's probably one that's definitely a headwind for them. I think when it comes to names like Cisco on the hardware side, they're probably one that's probably most exposed potentially negatively to AI, because I view more and more it's going to be less the hardware, more the software. I think Oracle is going to be a huge beneficiary. I think IBM is going to be a huge beneficiary. So I think it shows more and more it's the software players that are going to benefit.
Can we see NVIDIA as a software player or a hardware player?
I think they're a hardware player, but I do believe when it comes to physical AI, when it comes to robotics, autonomous, that's where they become more chip/software. Now, you could argue to some extent, like, do they compete with like Tesla in some ways? Yeah. But that's why the reason Jensen's the godfather of AI, because always 2-3 steps ahead. He plays chess, others play checkers, the kids table. That's ultimately going to be the next phase when it comes to NVIDIA, is just trying to gain more and more of that ecosystem.
Okay. Let's move on to some other issue, which is Korean market. Because like we're a YouTube channel, like we want more like bold and honest, frank answer. Like different from,
of course,
some like TV channels, right? Some Korean investors argue that, or wondering that why don't foreign investors find our market as attractive compared to China, Japan, or other emerging market?
I think part of it has been a lot of the disappointment with Samsung, in terms of just innovation, disappointment. I think a lot of investors got burned on Samsung relative to overall tech. I think obviously like SK Hynix has been one that's been a huge positive. Like I think more of a standout. You could argue Hyundai more and more has become more of like an EV, almost disruptive tech play. I think part of it is that everyone's been waiting for more and more innovation to come out of the Korean market. I could tell you, I meet with a lot of private companies here in Korea, where I'm more bullish on the Korean market today than probably I've ever been, because a lot of the private companies that I see coming out. So I actually think over the coming years, you're going to see more and more interest in the Korean market. But look, right now, it's all about AI plays. What are the AI plays in Korea? The reason China is more of a focus is, what are the AI? I could bet on big tech, whether it's Baba, Baidu, and maybe I almost get a call option on some of the AI plays there. So, but I do also think, when you think about U.S.-China negotiations, I think a clear benefit, when you think about who could benefit, I think Korea clearly could be a benefit in terms of investment dollars, in terms of less political risk, relative to when you think about U.S.-China. But I think that's why. I think that's very common. Like a lot of countries, like liquidity is an issue, right? In terms of what you see in different markets. But I do think things are changing dramatically, especially in this country, with a lot of the innovation dollars toward AI.
What's Wall Street saying about Samsung's current state? What do they see as something mistake?
It's more weakness? Talk, less walk. Like stop talking the talk, start walking the walk.
Right.
I think a lot of their, if you think about not just flip phone, but if you think about just a lot of their model build outs have been underwhelming. I think there's definitely been a lot more tougher innovation that you've seen at Samsung than maybe you would have expected a few years ago, because you have some of the best software developers, engineers in the world at Samsung, and I think it's one where everyone's waiting for them to make more aggressive moves. I think the view is that they're too careful in some ways. Maybe it's a little bit of an Intel-ish.
All right.
Like, I think too scared to maybe make some big bets. Because, look, it comes down to, like, you don't get to a point wearing a crocodile leather jacket at CES by being safe. That's not how Jensen got there and NVIDIA got there. So I do think Samsung, there's hope, but there's definitely, like, snake bitten. I think there's a lot of disappointment in terms of things that you've seen. Obviously, like, what do they do with some of their businesses? Are there strategic things they can do? I think those are some of the questions.
Right. So the world is changing so fast. They must be innovative and work their ass off. And
because you can't be in the right lane in a minivan going 45 miles an hour with a broken radio, saying your kid was an honor student in third grade, when the rest of tech is in a Bugatti going in the left lane at 100 miles an hour. So I think that's right now some of the issues.
Okay. How about, like, to the Korean market? Like, do Wall Street care about, like, Korea's corporate governance issue, or government policy gaps, or political status of Korea, or low dividend yields, or anything like that? Do they really
clearly
care?
the political situation, that definitely raised the eyebrows. And that was something I think that was surprising, right? Because the last thing you want is, like, political risk, which is not really normally viewed as something that would be a risk, in South Korea. I actually think investors, despite some of that, it's all focused on, like, the leaders in the Korean market and what they're going to do. I think the governance issues are less of an issue. I think it's really about technology and innovation.
Right.
What's coming out of Hyundai, SK, Samsung, LG, some other, like, I think that's what the street's focused on. Because guess what? Like, you come out with innovative LM models, real spending, things that are disrupting. It doesn't matter if you're from Kansas or Korea. That's what the street's focused on.
Okay. So, like, can you give a little bit of advice that, like, Korean investors who are investing in U.S. markets?
My advice is, like, get the popcorn out. We're less than halfway through the tech bull market.
Okay.
There's going to be digestion periods, some white knuckle periods, just like we saw with DeepSeek and others. But you navigate through that, and ultimately that's how I think we get to 25,000 on NASDAQ, over the next 12 to 18 months. Like, I think that's sort of our view, is that this fourth industrial revolution's playing out, but there's going to be a lot of headwinds perceived in terms of U.S.-China negotiations and everything else. You got to kind of see through that, focus on the numbers, do the work, and look, and that's how we focus. I mean, when everything's going up and to the right, my Shih Tzu can do this job. It's when you need to sort of navigate through the headwinds to see the opportunities. When NVIDIA is down 17% on a DeepSeek, those are the golden buying opportunities. Right. Not times to hit the elevator, because the haters are coming out of hibernation mode yelling, that this is it.
How about on the other side? What should they be cautious about, like investing in US markets?
Cautious, it's not valuation. I think cautious is just like keep an eye on inflation. And I think ultimately that will clearly be, something that we'll have more and more get under control, because the Fed is in a cut cycle. I think it's really China negotiations. I think it's just making sure it doesn't go off the rails in some sort of, let's call that a 2 to 5% chance of a black swan type event in terms of tariff negotiations. But again, with Trump, can't always worry about the initial. A lot of times in that game of poker, it's trying to get someone to the table in terms of negotiations. That's how he always does it.
Okay. This is whole another question. Like, I looked up some news interview about Robert Kiyosaki, and then he is shouting for month and month that the market is collapsing very soon, and he says we must invest in bitcoins and stuff. Do you believe that?
Look, I think there's many over the last 25 years that have called for the collapse of the market as NASDAQ's gone from 2K to 20K. If they were a scout in the NFL, they would have been negative on Tom Brady coming out of Michigan in 2000, okay? And negative on Mahomes and Saquon as well. The point is, I'm actually bullish on Bitcoin, bullish on crypto.
Yeah.
But those that say the collapse, the reality is, like, we are in the beginning of this next revolution.
Right.
And if you focus just on valuation, you've missed every transformational tech stock for the last 20 years.
Okay. So that's it for the interview. So
Great.
Then it's always a pleasure to
thank
have
you. Thanks for such great questions. The awesome shirt. Might need to get that next time I come here. And thanks everyone for watching. Remember, that's the whole goal here. It's just like it's navigating through it in terms of the goal at the end of the rainbow. And look, they just don't listen to the haters. Haters hate. It's what they do.
Right. Okay. Just for your information, this is from Disney.
Look, you always bullish on the Disney Winnie the Pooh, although not always bullish being at Disney. Waiting on a 2-hour line to get pretzels.
All right. Thank you, Dan, so much for being with us today.
Thank you.
And have a nice trip.
Yeah, I can't wait to be here in Korea. Thank you.
Thank you.